got Sunny here. Go ahead and give a thumbs up for Sunny. Smash the thumbs up button. Thank you very much. Here you go, buddy. Take a nap. All right, so it is Thursday, August 4th, and I hope you are having a better day than me. So far, it's very early. Every day is Saturday, but sometimes just things go against you. I forgot my coffee cup this morning. I'm not going to be very well caffeinated, so that's a big miss for me this morning. Also, I'm late. I'm never late, or I strive to never be late. There was traffic on the way to the office, so I am totally flustered and out of my element. So I have no idea what is going to happen today. It just feels like I should have gone back to bed and started over. But we will do the daily financial news anyway, because every day means every day, even when it starts off wonky. So let's just see what happens. This should be fun. So again, Thursday, August 4th, we get our jobs number tomorrow. This is the July jobs number. The latest expectations from the experts is a creation of 258,000 jobs in the month of July. What was last month? I have the numbers. Last month was 372,000. So definitely trending down, but still positive. So what I would like to ask you is to get your fingers ready. I would like you to take the over. Where is it? Over 258 or under? I'm going to take the over. And again, I think this might be an example of good news is bad news and bad news is good news. For example, let's say we come in at 358. So still down from last month's 272, but 100K above, almost 40% above. What that will likely mean is it will give the Fed more of a backbone, and I would suspect another 75 basis point move would be priced in. If it comes in low, let's say it comes in at 158, so a miss by 40%. I think, again, the stock market will look at that as risk on. The Fed has to slow down. So bad news, meaning we miss, is good news for risk assets, because the market will say the Fed is almost done. The Fed pivot is coming. All of this. If we blow this number out at, say, 350, it's going to give everybody pause. So tomorrow is a big, big number. Let me know what you think. Over 258 or under. Let's have some fun. It's just guessing. Nobody knows. If you really want to have fun, put a number on it. I don't know. Did I already say a number? I don't think I did. Did I? I don't remember. See, today's all wonky. I have no idea if I said a number already. So I'm going to guess 312. Just pulled it out of the thin air. Let's see what happens. 312 is my number. Next up, Bank of England. Bank of England came out today with their first 50 basis point move. This is their fifth interest rate bump. It now takes them, I think, to 1.5. Again, there had been quarter points up until this point. The Bank of England, I don't know how to say this. It seems like the Bank of England is being honest, where I think the Fed is being coy. I think the Fed is kind of looking at the scenario and say, hey, let's tell the best story possible. The Bank of England, I think, is doing the exact opposite. Let's tell the nation, let's tell the world the worst possible outcome, right? If you say the worst possible outcome, it's kind of like lowering expectations. You hope to come over it. When you tell the rosy picture like our central bank, it's easy to come under, and we can see that. So what do I mean? The Bank of England says we expect inflation to peak at 13.3%, and we expect that in October. Our central bank, near as I could tell, has never put a number on it and never put a month. They're the ones that said transitory, don't worry about it. They were the ones pumping money into the system when we first had a 5 or 6% CPI. I like how the Bank of England is doing this. They're basically, again, trying to get all the bad news out there where hopefully they can come in above that. Not only do they think that inflation will peak at 13.3, they once again are being intellectually honest. I think that what they're saying is the worst case scenario is it will take until 2025 to get to get CPI down to 2%. What is our Fed telling us? Don't worry about it. We'll be there next year. Come on. Rosy picture, worst case scenario. Definitely a different strategy. And then lastly, the Bank of England expects a national recession to start in Q4 and to last 5 quarters. So if the recession starts in Q4, the UK is going to be in a recession all of 2023. So again, a lot of interesting stuff coming out of the Bank of England. Next up, earnings. We got a whole bunch of them. Eli Lilly, missed top line, missed bottom line, lowered forecast. Kind of the triple miss. Restaurant brands, beat top line, beat bottom line, same store sales up more than expected. Services, people are shopping, people are going out. Shake Shack, missed top line, beat bottom line, but said June sales took a notable turn down. Booking Holdings, missed top line, beat bottom line. They blamed the miss on the top line with flight cancellations. Others, Clorox, cut forecast, missed earnings, missed on revenue. Yeah, when you miss and cut earnings or cut forecast, not good. EA, Electronic Arts, beat top line, beat bottom line, thanks to their strong FIFA franchise. I think that's soccer. I have no idea. I don't play video games. Charles River Laboratories, lowered guide, said strong dollar and higher interest rates are hurting the business. eBay, beat top line, beat bottom line on a volume of $18.55 billion. I had no idea that much stuff is transacted on eBay every day. That's crazy. That means like 600 million a day. That's pretty cool. I don't know if you saw this, but it looks like Walmart, after lowering their guidance, has started layoffs. They announced this yesterday after the close. It appears to impact about 200 workers at their corporate offices. One thing you should know as a salesperson, the hardest customer or client or whatever you want to call it that I ever sold to was Walmart. Did it twice. I never want to do it again. Talk about being put through the meat grinder. Ugh, not fun. Not fun. Opendoor is getting desperate. There should be a clock, I think, on Opendoor. How many days do they have left? We talked about them a couple days ago. They got hit with, I think, a 62, might have been a $63 million fine from the FTC for misleading sellers. Now their inventory is stacking. We've talked about Phoenix and Vegas. It appears now it's stacking in Sacramento as well. They are now offering $3,500 bonuses to agents to close a transaction by September 30th. Now, why do you think they would do that? Why do you think Opendoor would target September 30th? Folks, they're a public company. That is the end of their it's the end of their quarter. I'm going to guess Q3. I don't know if they're off calendar or not, but that's their end of their quarter. They want to show closings, right? They got to get their balance sheet is all out of whack. I am positive, right? All of these homes stacking up, nothing coming off, cost of carry, losing money every transaction. Opendoor, I don't know. There should be a death clock or something on Opendoor. I don't know how they survive another 12 months unless they issue a bunch of new shares. They kind of do debt. Maybe they sell things to hedge funds to stop the bleeding. I don't know, but it seems to be pretty tough. White collar recession. This is something I would ask you to look at. This is something I might be biased because I'm in the Silicon Valley. What I am seeing, at least as we start this rollover into the bad times, it seems to be very, at least initially, focused on tech and finance, right? I would argue that both tech and finance are feeling the brunt of the recession first as employees. I suspect we might be heading into a at least white collar led recession. I think blue collar in trades, in service, very strong. You can see layoffs in tech and finance, but yet services, travel, all of these things, they can't hire fast enough. So, and if it is a white collar recession, you have to ask what that means. What are some things that you and I have talked about over the last year? If you look at the discretionary spend of all of our earners, I think it was the top 30% spend 70% of our discretionary income. I don't know if that's true. It's probably close. But what that means is, hey, if white collar retreats, pulls back, that will have a disproportionate effect on discretionary spending, and we could talk ourselves into a recession. And today, I feel like I got snake bit today. I've already told you I'm late. I don't have my coffee. I'm all out of sorts. But even with that, we are going to try the Three Amigos live today. So what I think I have to do is I have to start a Zoom call with Dion and Matt. I then have to go to YouTube Live. I have to insert, I don't know, 3 or 4 URLs. And then I have to go live on YouTube. My intention to do this is so that you could come in and ask Dion and Matt questions. I think we're going to try to do it on self-management. This goes on at 10 a.m. I think there's some technology things and delays. I'm going to try to make it work. I am going to give it an honest effort until 10:10. If we're rocking and rolling and we're answering questions, we will go an hour. We might go 90 minutes. But if by 10:10 I am frustrated, I am feeling like we are not providing the service I had hoped for, I will kill it and I will just talk to Dion and Matt alone. But it is our intention. Dion wants to do it. Matt wants to do it. I want to do it. We want to bring you into the Three Amigos. We want to show you how much fun we have together. And we want to answer your questions about self-management. I feel snake bit. This is going to be interesting. But I'm going to give it a shot with these two guys helping me out. And then finally, Saturday, we're going to go deep on ADUs. This is a student-led deep dive on accessory dwelling units. I have to create the Zoom link today. I will post it in the private Facebook group, and I will send it out on Teachable. All right, folks, I am very nervous, but let's see. Let's see how 10 o'clock goes. Fingers crossed we make it work. Take care, everyone. Bye-bye.